Just a quick editor's note that this episode was recorded before the Fed meeting on September 18th. Pablo and our guests do talk about interest rates that were current as of the day this episode was recorded. Thank you for listening to the Top Producer Mindset podcast and hope you enjoyed this episode.
Hey, everybody, welcome to another segment of the Top Producer Mindset. I'm Pablo Martinez. I have a special guest today, Chris Calderon. Thank you so much for taking time out of your busy schedule to join us today.
Thank you.
Yep. So, today we want to talk about what are we going to talk about, Chris?
I think we should just kind of talk about things that are going on in the market. And, obviously there's a lot of excitement. The Fed minutes came out today. So there's a high likelihood that rates are going to be dropping in September and what it means and kind of maybe temper some of the expectations that I think some people are having.
Yeah, and you've been in the business as long as practically I have, 21 years, a long time. So we've seen all the ebb and flows, all the ups and downs and all the side crazy things that have happened in this industry, and we all know that when rates come down, I mean, it starts, people start thinking about making moves, refinancing. And so what's your take? What's your prediction about what's going to happen maybe in the foreseeable future, next couple years?
I think in the short term, obviously when rates go down, right? Lenders like us, we already bake that in to our pricing. So when we do have that Fed meeting in September and they do drop the rate a quarter, and again, that's assuming if they do, but there's a high likelihood that they will. Assuming that they do, it's not like we're going to see it immediately because we've already baked it in and we've already seen the past 4 to 6 weeks rates have come down to their lowest point since I think February of this year, right? Now, with that being said, with rates coming down, there has been an influx of refis. Refis have gone up 31%, right? Applications, at least. What is interesting, though, there hasn't been a spike in purchase application, right? And one of the things I'm thinking is this is now you're going to have some buyers who were thinking, well, I'm going to wait for rates to come down, and now they're hearing that rates are starting to come down, and that might keep them on the fence even longer because they're like, well, we see how that quarter rate drop in September. Let's see what the Fed does a little later on in the year. So I think there will be that effect. But conversely, if rates come down too quickly, as we know, it'll cause prices to go up even more because there's still an inventory issue, especially here in Southern California. So I don't think it's going to have the results that people in our industry think it's going to have. I don't think it's going to be this huge bonanza. I think maybe we might see like a micro refi boom. But what I will say is this: when I have told some of my clients over the past few weeks, it might not have the results you want, but we'd much rather hear that rates are coming down than rates are going up or being held. I think it does tell us we've kind of hit that curve in terms of inflation.
Yeah, yeah, you make some really excellent points, and I think what's going to happen, from my point of view, is that we had a lot of people after the COVID rates, they had dropped and then they came back up. We had a lot of people, that bought with higher rates, and they might be the first ones to pull the trigger because it makes sense to go from a 7 to a 5.
Sure.
But the folks that locked in a while back at 3 and 4% might want to wait a little bit longer before they make a move. But for me, I think it'd be a healthy move if we didn't have just all of a sudden influx of refinances happening all at once. I think that type of phasing down would be great for everyone because it allow for all of us to kind of provide that service and be able to help them close their loans. What about HELOCs? Are you seeing a lot of you expect a lot of people to start taking out HELOCs? I know those are really rate sensitive. They're tied to
to,
the
to the 10 year.
yeah.
So we have seen an influx in that. We've seen actually more people doing close end seconds. We've seen more people kind of gravitate towards that because the rate is fixed. Whereas as a HELOC, the rate's always going to be a variable. Now, granted, with rates coming down, it'll be a little bit more beneficial to people who want HELOCs. So we are seeing that. I think one of the things that we're going to see, and just talking about refinances overall, is we might see somebody who maybe you'll have somebody who purchased a year ago, a year and a half ago, and maybe they got a 6.5 or a 7. And now because rates have gone down, the opportunity has presented itself for them to get a 6, for instance, right? But one of the challenges that's happened over the past 12 months is, and this has actually really been going on for more 24 months, is a lot of buyers, right, when they bought their house, they've accumulated a lot more debt, right? You're seeing Americans having to use their credit cards for more and more everyday purchases. for gasoline, for groceries, etc. So what we might see happen is even though rates have dropped, and even though they might a buyer who's going to be now refinancing might have the opportunity to lower their payment, they might not qualify. So yeah, their payment might be going down $300 or $400, but they might have accumulated a lot more credit card debt, and so they don't fit the debt ratios.
Or at the same time, the customers that do have lower rates might say, "Hey, I racked up all this credit card debt. It only makes, I have a mortgage at 3%, but I have, 20, 30,000 at 22%, or I don't even know what credit
Right.
cards are at right now, but do a big consolidation might even make sense for them so that they can knock off those debts and save on a monthly basis,
So
you know?
that's really a good point, right? So the average interest rate on a credit card right now is 19%. And right, we're talking tier 1 credit. So realistically, you're seeing more and more, Americans, the average interest rate on their credit cards is probably more like in the mid to high 20s. So you might have someone who's at a 3%, they're kind of buried in debt right now. And so a 6%, a 5.5, if rates continue to drop, will be a lot more palatable than a 7%. And then when they run that blended rate, hey, they might be like, well, yeah, I'm going to give up that three, but I'm going to be saving $800, $900 overall. Maybe my mortgage payment might have gone up, but my monthly outgo saving, could be thousands depending on what kind of situation they're in. And I think we will see that.
Yeah, and I agree with you. I could totally see that. And off camera, you had mentioned that you had some graver concerns about the overall economy and all that. Can we talk about that a
Right.
bit?
So, one of the things that I talked about was whenever the Fed goes into a rate hike cycle, which they have over the past couple years, typically after the last rate hike, 11 months after that last rate hike, historically we start to see the country enter into recession. Now, it doesn't mean on that 11th month, that day that, recession hits. It doesn't work that way. As we know, recessions kind of creep up kind of slowly. But last Fed rate hike was in September of last year. We're now in August, so we are in that 11th month. So you see that, we've seen a huge spike in 401k withdrawals. People have had to now dip into their 401ks to make their mortgage payment, to keep up with their car payments, etc. There's been a huge spike in people making minimum payments on their credit cards in the past 12 months. So those are the things that I'm more concerned about. We're on pace in 2024 to sell the fewest amount of homes in the United States since 1995. But yet there's 60 million more people in the United States today than there was then. So there's these numbers there that have me concerned. And I know, when you're in the mortgage or real estate industry, we tend to be very myopic and just kind of focus on our industry. And I always encourage people to kind of look a little bit beyond that because that's going to really tell the tale of the tape. So, you and I were talking a little bit earlier off camera about volume and opportunity. There's been a lot of opportunity, even though the market's been down. There has been growth, but I think that growth has come from the people who didn't just get into industry when, rates dropped during COVID, the people that had established relationships. You know, uh, One of your loan officers, Kim Rangel, we were talking about this. I don't know if it was last week or 2 weeks ago. And because of those relationships we've established for 10 years, 20 years, that's when they're really counting now. So I think in that regard, you know, going back to the overall economy, I'm concerned. And this is regardless of who takes the White House in November. And I know we definitely don't want to get political.
Yeah, yeah.
We definitely don't want to do that. But I think we have some challenges there. And it's gonna be interesting to see where our economy's at, August 21st, 2025.
Yeah, and were you shocked when, I was a little actually not shocked, but when rates started creeping up, I was a little nervous because I don't know if you went through I don't know where you were at during 2008, 7 when the market crashed, and I just started getting like jitters and and memories about what happened back then, right? I'm like, oh no, here we go again with the
Right.
rates going up, right? And for us as mortgage lenders, it can be terrifying because we've learned that higher interest rates equate to lower volumes of business, right?
Sure.
We got bills to pay and we got things we got to cover. And so, it spooked me a little bit. One of the things that we did, and I learned from the crash was, we put a lot of money in reserves. We did really well during COVID when the rates dropped, and we're always smart, putting reserves away because we know how this business is feast or famine easily,
Sure.
right? And so, to see the rates go up and just to see the property prices go up was like, whoa, this is actually pretty, it kind of took me back a little bit. And it was good, to see that people were still interested in buying and it actually had the adverse effect. Now, with rates dropping, we're all assuming that prices are going to continue to rise, and maybe we're all going to be wrong, right? Because sometimes it seems like this market is illogical. My suspicion is that if they're doing, if home prices went up as a result of rates going up, I can only imagine what's going to happen as they go down, right? And I was having I don't know, a conversation with a family member, someone I forgot. They're like, "Oh yeah, I heard rates are going to drop. I'm going to start getting ready to buy." I'm like, you should get ready to buy right now because of the rates drop. It's going to be even worse. You're going to get a better rate, but you're going to buy the house at a bigger price. What are your thoughts?
Well, I mean, obviously because of COVID, which led to the circumstances of 2021 and 2020, 21, and 22, where things just kind of we just saw volume explode, right? We hadn't seen a pandemic since the Spanish flu in the 1910s or, So how we're going to get out of this one as an industry, I don't know because the circumstances what led us here are unique, right? Um, as far as prices go, there has been an uptick nationally, at least. And obviously, we know real estate and mortgage is very local, but there has been an uptick in price reduction. Actually, a pretty large uptick. Now, obviously, we haven't seen that much of it here in Southern California, right? But you guys lend nationwide, we lend nationwide. So we are seeing it. I think there has to be some type of correction in pricing because I mean, if you look at any financial chart in any industry, it can't just go in one direction. There always has to be a correction, right? You look at the stock market, you look at our economy overall, right? It's been going up for 7 years. It's not going to go up forever. Now, to what extent we see it drop, who knows? Now, with rates coming down, I really think what's really going to be more beneficial is if we see prices come down. I really just don't know if that's going to happen.
And I have a hard time seeing that because again, if rates go down, it means payments more affordable, and people are going to want to jump in, and they're going to keep pushing those values up, which is great for us
Right.
homeowners, right?
Correct.
Because we want to see our values go up. So I guess it's a wait and see, and I'm in the side that the housing prices are just gonna get worse. And if you're thinking about buying, you should do it now before the herd gets in there. But hey, this market always surprises me, and it could go the other way.
Another thing to factor in is, and I knew the number off the top of my head, a couple weeks ago, but right now millennials are entering into their prime buying years, and I think
That
every
is true. I
day,
read I read that
right? Yeah,
somewhere.
and every day, I forget how many tens of thousands of Americans are becoming 35, which is typically the prime buying year. So that's gonna kind of factor in, and then when you've got huge companies like BlackRock, et cetera, they're gobbling up SFRs and adding it to their portfolios. I don't know. I really don't know. Some days you might ask me and I'm like, "No, I think we'll see values drop." Other days you might ask me and I might say, "And I think they're gonna go up." And then you'll have days like today where it's just like, it's gonna be a wait and see. But, kind of what you were talking about, when rates started to go up and how it reminded you of 2007, 2008, it reminded me the same. I had the same kind of flashbacks, but everything started to happen in slow motion. Whereas when the market crashed in 2007, 2008, I had only been in the industry for, at that point, 5 years, 6 years. When the market was crashing, everything happened so fast because I had never been through a crash. Whereas this time around, everything has kind of happened in slow motion. It
Which is
was,
great, which is
yeah,
great.
correct,
Yeah,
right.
because it gives you time to
To
adjust.
to adjust, right,
Yeah,
because I'd seen it before,
and pivot,
right,
yeah.
and I saw some other people who were newer in the industry, and they panicked because it was like, "I remember being you. This is happening like you're spinning." Whereas for us, like someone like you or I who's been doing this a long time, for us, it was just kinda like, "Alright, here we go again, but here's what you have to do." And I think not only financially are we so better prepared, but I think just from a maturity standpoint, I think from a knowledge standpoint, at least speaking for myself, just a lot more prepared in that way.
All right, great. We got the economy stuff out the way. I do wanna change gears a little bit.
Sure.
We're a wholesale broker hybrid model. We have Equity Smart offers the best of both worlds. We do direct lending. We also do wholesale. We have great wholesale partners like yourself. Really appreciative of everything you guys are doing to support us, to support our loan officers as always. But I just want to touch on a theme that rarely is talked about, and just want to get your take. Before we had big wholesale lenders like UWM come out and with their technology, Rocket, and all this stuff. It was pretty much I feel like a playing even playing field for all the wholesale lenders. Then in 2012, 2013, you have these wholesale lenders that you just come out of nowhere and then start to try to dominate. Just curious to see what your take is on what the future looks like for wholesale lenders, in the sense that we're having these big giant wholesale lenders that are trying to dominate. And what's your position on that?
I think, even, in the subprime days when I got in and I was working at New Century and, we were the nation's number one subprime lender at that time. There's always going to be niches for you're going to have the huge gorillas, and then you're going to kind of have more of those mid-tier lenders, and then you're going to kind of have those smaller ones. Um, Obviously, a UWM, a Rocket, very fantastic lenders, and I always tell people this: UWM is some of the best technology in the business, right? I think Rocket is right up there as well, but they cater to a certain type of clientele, right? And then you have like a mid-sized lender like ourselves, right? And we cater to a certain type of clientele. One of the things that people always ask me, how did you become, number one in the industry without having a technology like UWM or without having the interest rates like Rocket? And my thing at the end of the day is you've got to know your guidelines really well. You got to know what people want, and you just have to project that confidence, right? People know with me, is it going to take me a long time to get a call back? Absolutely. But am I going to get a call back with a solution to my problem? Absolutely. And so you kind of weigh it out. So when I look at a UWM, I never compare myself to them because they do a certain type of a business and we do our own kind. I think we have seen a lot of wholesale lenders kind of go by the wayside over the past 12 months. And depending what happens in our industry, we might see even more.
Yeah, I'm a big firm believer, like, for myself, when I was a loan officer, and I worked at different companies. I worked at Countrywide Home
Sure.
Loans, GMAC Mortgage, Wells Fargo. And one of the things that actually propelled me to move forward and become a mortgage broker was, I remember oftentimes sitting at the signing table with the borrowers, and at the end they'd be like, by the way, what company do you work for? And I'm like, oh, well, I'm like, how could you not know? Yeah, I've
For
been
sure.
working with
Right.
you
Yeah.
for the last month or so, right?
Uh-huh.
And so that led me to realize that, what, my customers are working with because of me, of my brand, my personal brand, right? And so they were gonna go wherever I'm taking them. And I realized that, some of these lenders picked up on that and realized, you know what, we don't need to go after the lender. We already got the army of salespeople out there. We just got to entice them and come to, so that they can bring those deals to us. And what types of tools and technology and things like that can we offer them so that we can draw that attraction. But for me, that's there's always been that, also that personal human, aspect that's very important, right? When you get too big, there's a lot of things that start to get lost, in the same way that, when you go to a restaurant, if you go to a buffet, the quality of the food's gonna be a
Sure.
lot lower than if you're getting a specialized dish or something like
Right.
that, right? And I think that's the gap that a lot of the mid-lenders, feel, that things, that personal touch, that being able to call up, talk to the underwriter, and be more solution driven than guideline driven,
Sure.
right? So, where do you see the future of the broker? For me, I think that we are the way, we are the future. I think that as each day goes by, every year goes by, we're going to see more and more retail loan officers and loan officers overall enter this channel.
Right. So I agree with you. I remember when might have been 2010 when that Dodd-Frank Act came out and everybody was like, "Man, brokers are gonna go out, and so if brokers are going out, you're gonna be out of business because that's your clientele." Obviously, I don't deal with the consumer directly, and I'm like, "No, brokers fit a really, really important, right, space in lending." Like, you'll have a bank like a Chase or let's say a East West Bank, right? And their guidelines are very rigid, right? And they serve a specific clientele. But I always tell people, and I was just telling somebody about this at dinner yesterday, Borrowers don't live their lives to underwriting guidelines. Borrowers aren't like, well, I better not deposit this $8,000 cash, right? Borrowers aren't going to be like, well, maybe I shouldn't buy this car, even though I know I'm going to be buying a house in the next 30 to 60 days. So you need brokers to kind of be like, hey, your situation's unique. Let me shop you. Let me see where I could find you a home. Because if a consumer goes into the bank themselves, well, if that bank can't do it, that's it, they're done, and then they're gonna have to go look for a broker. I don't think brokers will ever leave this industry, and I think brokers have had maybe not from a volume standpoint the past couple of years, but I think they kinda realize, "Yeah, I do play an important role," because the deals are a lot tougher today than they were 3 years ago. So you've gotta have options, and I think that's what brokers have, and I think that's what's kind of allowed you to grow so exponentially over the past couple years especially, is because you've had people come to you and say, "I love your platform. I like the flexibility," especially that hybrid platform that you have, and I think that's been really beneficial.
Yeah, and I think one of the things huge for myself, I'm glad that you brought that up, is when I started in the business, geographically, I was bound to an area that I can work, and let's call it Los Angeles, right?
Sure.
Because back then you had to get wet signatures, you had to get income and assets, and so you had to drive out and meet customers. They came to your office, and it was really a time-consuming process, right? And I wasn't really going to originate alone in San Diego or Sacramento because I'm not going to drive out there,
Right.
right? And, after 2008, we had the ability to DocuSign documents. We also had the ability to email income and assets. And we're to the point now where you can snap photos of documents and you guys will accept that as condition, which to me, I thought that day would never come, which I think is amazing. And one of the things that Equity Smart capitalizes on and puts out there to the loan officers is you have all the promises of technology. I don't know if when you were young, but I was young. I said, "Hey, technology is going to free us up. They're going to do a lot of things for us." And I think we're very blessed because we're one of the first in the industry. I think in a lot of the industries where we really get to feel the freedom of the technology in the sense that we have complete control of our time. Equity Smart. When you work as you're a loan officer here, you have complete control of your time. If your kids have a play, you can go to their play or go to family functions or whatever. You can create your own schedule. And now with the other things that I mentioned, you have mobility. You can be in vacation and still be working, half
Right.
vacation and half working. Income potential is all up to you. How much, how hard you want to work is how much you're going to earn. And for me, being in the business for, over 25 years now, I think the best benefit that I've gotten it, and I think a lot of loan officers benefit, and maybe yourself as well, is, we get to invest in ourselves. We realize that in order to be great salespeople, to be great people, we need to invest in ourselves and become better versions of ourselves so that we can go out there and get business and provide the best service to our customers. And those are all the benefits of being a loan officer. And that's why I enjoy this business. I enjoy what we're doing because on top of helping customers make their dreams come true, the lifestyle of a loan officer has become one where you have everything you could want in a job description. So imagine that in a job
Yeah.
description, right?
I think, when I first got into the industry and maybe about 12, 18 months in, things were going really, really well. And I think we all have this one friend who's kind of like always negative. And
I have a few of those.
okay, right, 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 right. But as you get older, you kind of start to know you cut him out. And I had this one friend, and he was like, I don't know if I would ever have a commission only job. It's really risky because you never know what you're gonna make. And I'm like, no, I know. If I work harder, I could give myself a raise. If I want to close more, I'm going to give myself a raise. If I want to close less, I could take that time off, right? Whereas you and he was working for a medical distribution company, right? You don't know if your boss is going to come in one day and say, "Hey, so and so, we're giving you a pay cut," or "Hey, you know what? We're laying you off." To me, that's risky, right? Whereas us, we're self-employed, we're entrepreneurs, loan officers, they're entrepreneurs. You can control that, right? And I think that's what I enjoy about this business is the freedom to make as much as you want or as little as you want. Obviously, there are external factors, the market, et cetera. We've seen that happen recently, and we've seen that happen 15 years ago. But you have that opportunity.
Yeah, and it's like, I don't know if, like turning up the volume and turning it down, and I've done that before where I've had huge months and I've closed a lot of transactions and I'm, 3 months hitting it hard, making tons of money, and I'm like, "You know what? I'm exhausted. I'm gonna dial it down a little bit because I'm
Right.
getting way too many calls." And you're right, and for me, one of the scariest things for me in 2001 was going on my own. I was a retail loan officer, top producer, 401k, everything, and I was a young buck, and for me to let go of all that was kinda tough, but at the same time easy because I had no attachments, and I also wanted to explore what the possibilities were being on my own, and, looking back, it was one of the best decisions I made. It was scary because you were on your own, and everything that you and I do depends on what we're gonna do next in terms of how we're gonna go and get business, right? So, I prefer that, knowing that I have control of what my income is gonna be versus being ran by some manager, CEO that
Mhm.
may mismanage the company and then I get laid off, like you said. And so, I think this is a great way because if I'm not performing up to par, then I have the ability to work on myself and say, what am I doing that is not allowing me to get business? What areas of my persona, character, whatever, what is it I need to do so that I can capture more and more business, right? And that's when you start looking inwardly and you start progressing, you start becoming a better version. The version of Pablo that in 2001 to now is way different,
Sure.
because of all the experience, tools, knowledge, everything that I've learned along the way. I know we're running out of time here, but what advice do you have for anyone that's thinking about maybe becoming a loan officer, getting into this wonderful industry that, and you get to meet, you work across many different companies and you get to meet all kinds of wonderful people. And what are some of the things that stand out to you that you may offer some advice?
I think the advice that I would give Pablo, and quite frankly, it wouldn't matter if you wanted to become a loan officer, if you wanted to become a dog groomer, what have you. I think at the end of the day, it's consistency. And I've said this time and time again, like a broken record. If if I was had to be born again and God said, "Hey, I'm going to give you one attribute. You could be charismatic, you could be, great at numbers, etc." I would just say, God, just give me a great work ethic. I'll take care of the rest. And whatever it is that you're doing, whether it is you're in a marriage, you've got to work at it every day. You've got to bring it 100% every day. And one of the greatest things about sales is when you get home that night and you're lying in bed, if you mailed it in or if you gave it 100%.
Hmm.
You know. When you wake up in the morning, you're brushing your teeth, you're going to set the tone for the day you're going to have. And that's what I love about this business is at the end of the day, when you do sales, when that production report comes out, when that paycheck comes out, when that commission check comes out, it tells the tale of the tape. Now you're always going to have that sales guy or that sales girl. Well, if this and the company or it's the rates or my borrowers or the realtors, it's you. It's you. You find me a top producer, I'll find you common themes. You find me someone, a salesperson, right, who's always at the bottom end of the totem pole, you're gonna find some common themes as well. That's really what I think. Now, it's really easy for people to talk about, especially since we're in LA, Mamba mentality, stuff like that. Like, don't talk about that. Just do it. It would be a shame if 2001 Pablo was the same guy as 2024 Pablo, right? Now, obviously, the hardworking, characteristics of you, certain things, you want those to be the same, but better. But if you're the same person today than you were even 3 years ago, 6 years ago, etc., that's a shame. And I think once we stop growing and once we stop trying to get better, that's when, you know what I mean, it's time to call the funeral home and make an appointment because that's when you start dying.
Yeah, and you could agree with me on this, but time flies. I mean, I
It
can't
flies.
believe it. I can't even believe I have as long time in this industry as I have now, and it flies, especially when you're enjoying and you're growing and you're having fun, and it
Yeah.
happens in the blink of eye. And the last thing you want to do is regret not living to your potential every day. And I think that's one of the things that push me. Am I maximizing my days today? And to be quite honest, I worked harder in my early years than I do now in terms of grinding it out, file per file. Now I'm working on higher level stuff that I enjoy, stuff strategies and things that we're trying to do to improve the company. So it's my work has shifted, but all that equity that I've built in myself throughout the years I've been able to pivot into other areas like by growing the company and all that. And it takes someone like myself. I think I'm one of the few brokers out there, Hispanic brokers
Sure.
even, that's running a large operation like this. Coming from a loan originating background, a lot of these other companies, they have people that don't have, that much loan originating experience, and they're just trying to run companies and see how much they can make off loan officers, whereas we're trying to really focus on the experience.
It's funny that you say that, especially, myself being Hispanic as well, right? And and I'm always the first to admit I'm not the best Hispanic. My Spanish isn't that
Well, you
good.
do have blue
I
eyes.
do have blue eyes too, right? But I always say this, one of the things that we're known for, especially being Mexican, I'm assuming you're Mexican as well, is our work ethic, right? And all out work anybody. And people say, Has your work ethic changed?" No, for myself, like, this is just what I do. I don't know how to do anything else. My father, he's an artist, he's a sculptor, and he's one of those artists, he lives off of his work. It's good for him. And he could be in his studio sculpting for 12, 15, 16 hours, right? Nobody ever says, you know what I mean, you're working too hard, right? But when people hear I'm working 15, 16, 17 hours a day, you're working too hard. I disagree because this is my passion too. So I don't look at that way. Now, some days I do. I mean, we're not all going to have the good days, but I would say 85, 90% of the time, like, I'm fortunate that I love what I do. And I'm fortunate I love what I do and the lifestyle that it's been able to provide.
Yeah, and the fun stuff like, doing these podcasts
Sure.
and sharing our knowledge and wisdom with the audience here, I think is
Right.
great. I think we're almost out of time. I want to thank you so much for joining us. Any last words for anything that you want to close with?
If there's one last words I'm going to say to whether you're a realtor or whether you're a loan officer, you're in title, you're in escrow, right? You can't control what the market's gonna do. You can't control rates,
The
what I
weather.
mean? The weather, you can't control what the economy is gonna do, but you can control what time you get out of bed, how many new relationships you try to make, how many existing relationships you try to strengthen even further. That's what you can control. Be cognizant of the external things, but at the end of the day, just focus on what you can control. That
Yeah,
would be it.
and I'm glad you said that because I always think that the one thing I can control always is my next step.
Correct.
What's that next step going to be? Because that's 100%. I cannot control what anyone thinks. I cannot control how anyone's going to react to anything. But one thing guaranteed for sure is I can always control my next step. Where is that next step going to take me to, right? And
Correct.
that's what I have full control of. Well, thank you guys so much, Chris. Thank you for taking time
Thank
out
you for
here
having me.
joining us. Hope we can do this again. I think
Absolutely.
we had a really good conversation. I want to invite you again for sure in a few months so we can check back in and just share more, share more of who we are and what we're about. And again, thank you guys out there for listening to us. This is it for Top Producer Mindset. Thank you guys.